Could you ever imagine that whole population of China is not enough? Not enough to occupy all the empty apartments that are built in China in recent years.
How many vacant homes are there now? The most extreme experts believe the number of vacant homes are now enough for 3 billion people. That estimate might be a bit much, but 1.4 billion people probably can't live in all of them.
It means that China solved the housing problem in just 30 years, lifting millions of people out of poverty. What could be wrong with that? It is impossible that the second largest economy of the world could get into a mortgage bubble and repeat the 2008 crisis by building so much housing, right? Well, not really.
A liquidity crisis has been unfolding in China for several years now. The stock market has been collapsing for 4 years in a row. The real estate sector, which has been adding hundreds of billions to the country's GDP for more than 20 years, is now burning money. Multi-billion-dollar companies are collapsing one after another, and the reason lies in 3 lines.
The construction development business in China is no walk in the park. It is like a high-stakes game. Typically, companies must navigate permitting processes, land acquisition, labor management, and compliance with building codes and environmental regulations. Additionally, relationships with local governments and stakeholders increases your chances for survival in this competitive market. Playing aggressively, with unbelievable amount of debt is usual practice for Chinese property developers, just in order to compete with others and expand rapidly. The business is thriving when everyone believes in economic growth, generating tons of money and expands enormously. But the hard time comes once the growth slows down due to some pandemic or decreasing demand. The endless rows of high-rises with barely any indication of human life. That might remind people of what lockdown cities looked like during the pandemic. They're not abandoned, they're just unoccupied. 65 million homes are vacant as of 2017. Which is equivalent to entire population of France.
The Chinese government invests a massive amount of money into infrastructure, building roads, metros, tunnels, bridges, skyscrapers, and everything you can possibly imagine. It was actually the main growth strategy as well, since every new project raises the country's GDP and creates jobs. During the economic boom, all these measures were mostly successful. Even if an entire new town was empty at first, with roads leading nowhere, after just a few years, people started to appear because the demand was strong. Borrowing money has never been easier for developers, and with that said, they built larger, stronger, and bigger. Of course, that cannot continue forever. The urbanization levels started to decline. More than 90% of households are homeowners, so there is no simple demand for more housing and people start to buy it only to store wealth.
But how do construction developers raise money for their projects? It is obvious that pre-sales of apartments cannot fund all the expenses. From this statistics, we can see that almost half of the funding is done through bank loans and self-raised funds, while the other half is done by sales. Self-raised funds mean that these companies heavily rely on investments, and bank loans are cheap credits with government support, I guess. At some point, the Chinese authorities realized that a bubble was inflating in the real estate market and introduced 3 red line policies in August 2020, which significantly reduced the debt limits of companies. But the problem was that many developers had already violated at least one of the points of the new law, and one company broke all 3. Evergrande was huge. I mean really huge. In 2019, it had over 700 active projects across China, with 800,000 residential units completed. Besides all of that, they were involved in electric vehicle production, healthcare services, fintech, football club ownership, tourism services, and so much more. Basically, everyone thought Evergrande was too big to fail. And when it started to struggle with bond payments, investors and markets' trust in the real estate market collapsed. As I said before, 2 main sources of funding, sales and investments went down. The crisis spread to the entire property market and affected the banking sector afterwards. The real estate market is 30% of China's GDP, so the country's economy is also struggling. In fact, those are incredible numbers. For example, even during the peak of America's housing bubble, real estate accounted for only 18% of US GDP. Everyone is too dependent on the health of the property market. The central government, local governments, developers, homeowners, manufacturers, and more. Considering that almost 75% of Chinese families' wealth is tied up in real estate, the government cannot afford a sharp decrease in home prices.
However, maintaining the current situation means that housing for most people will remain unaffordable. For instance, apartments in Shanghai cost the same as in New York City or San Francisco. But the average after-tax income in Shanghai is only $1,000 per month. Another inevitable problem approaching China at the moment is its demographic crisis. The labor force, marriage rate, and birth rate are all shrinking. It's the end of the real estate boom in China. I guess we are going to witness a long stagnation in the housing market as Japan did in the 1990s.
But we cannot predict the future. In fact, nobody can. Let's see what happens.